Welcome to the Trading Desk, where money talks and conventional wisdom walks. My name is Dave Floyd, and I'm here with Jesse Felder and Matt Davio. And on each show, we're going to provide you our biased opinion on everything from stocks, bonds, real estate, and even foreign currencies, or any other asset class for that matter, that deserves attention at that time. First, however, I wanted to give you a little background on who we are. I'm going to start with myself. I've been a professional trader since 1993, first starting off in the equities market, and then into the foreign currency market back in 1998. During that time, I've traded from my own account as well as bank accounts, and now I trade on my own and manage other clients' money. Jesse, how about you?
I started a little over 10 years ago at a large investment bank. Spent a little time there before I left to start a hedge fund. Did that for a little while and decided I'd rather just manage individual portfolios. Been doing that ever since.
I'm Matt Davio. I've traded for hedge funds over the last 15 years, including my own fund that I ran for 4 years. One of the things that I'd like to point out is a lot of times trading desks are very collegial. They're, a lot of the reasons why I wanted to get into trading was it was a fun atmosphere to work at. Part of the reason we're doing this show is to have some fun, but we'd like to give you a different perspective on making some money in different types of markets, whether stocks, again, forex, commodities, it doesn't matter. We'd like to bring ideas that maybe your major broker is not bringing you on an everyday basis. So with that being said, what we'd like to do at this point is take you to a clip that shows a recap of what happened in the markets over the last couple weeks.
The S&P, again, is the largest correlation of the U.S. stock indexes, has fallen dramatically over the last 3 weeks. You can see we've had over a 10% correction for the first time in 4.5 years. This is a significant event to note, as we have not seen that type of move in 4.5 years. The next chart is showing the 10-year interest rates. 10-year interest rates have also fallen sharply as the stock markets have fallen. They tend to move in correlation. When interest rates rise, stock markets tend to fall. So the 10-year is very important to watch for correlations in the market. Next is the U.S. dollar index futures, which, as you can see, going back to 2006 has had a huge fall. And if you go back even further, the dollar has been in basically free fall for the last 5 or 6 years. Again, an important note, when you're leaving the country, U.S. dollars don't go as far. The next chart we want to talk about is the commodities index chart. What we wanted to point out here was inflationary measures are actually waning, and prices of commodities have been falling going back to the top that was hit in the top part of '06. So we have been on a free fall there, and commodities have actually fallen 20%. So inflationary, again, is waning there. The final chart that we want to bring up for today's show is to show the housing index going back again until the summer of '07. The publicly traded housing sector has fallen nearly 70% since that time period.
As you can see from the clips that we just saw, we had a pretty dramatic week on Wall Street last week. A lot of ground was lost. It's really probably the first big drop we've seen in the market in nearly 5 years. So we're going to have a lot to talk about for this show, and that's the bulk of what we're going to discuss on the next segment. What we're going to do, we're going to discuss it in 3 bullet points next segment. We're going to talk about the volatility that we're currently seeing in the markets, the liquidity bubble, and more importantly, what is the smart money doing now? So we need to take a break, but when we come back, we're going to get right into that.